Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
What's up, everybody? It's Monday morning. Welcome to the Daily Market Commentary. Hope everybody had an absolutely amazing weekend. I want to wish all the mothers out there a very happy Mother's Day. A little bit belated, but hope you had a wonderful day. Spend some time with the family and the people who love you and appreciate you. So let's go ahead and dive right in. For those of you new to the channel, we look at the same 10 to 12 futures markets every day, identifying potential breakouts and reversals from an educational perspective. So you will notice some of the lines on here from last night's live trading room. So some of the levels we've already addressed, but let's go ahead and dive in. So on the S&P, we are clearly down this morning about 35 points. So strong move down. We had gapped down last night, and then on last night's gap down, we had looked at, if we got a rally back up to get us another chance to get short. We unfortunately did not get any of that. And so no real shot to get short yesterday or last night after the gap down. Now, those certainly did play well for a gap and go. We had talked about a potential for a gap and go scenario last night. And for us, the gap and go works like this. Your entry is below this first candle's low, and your stop goes above the first candle's high. Now, that's a fairly wide stop for a lot of people, but we've moved down a little bit since that since that gap and go area. And price, tried to give us a little rally right there at the European market open, and was pretty much unable to hold, and now is continuing its next leg down. I would say that prices have a better chance of continuing down today than they do up, and so we've got a couple levels of supply above here identified, but in reality, you could probably even look for a breakdown if we get a breakout trade to the downside. Same thing in the NASDAQ. NASDAQ actually is taking it on the chin a little bit stronger. We have our 15-minute reversal level up there. Price dropped away very strong here. Our 2 a.m. reversal was not anywhere near, as strong as the other levels, and so price is continuing to move down. We actually set up the concept of a candle-to-candle short last night, and it is working along just fine for those of you that were able to get in on that position. I will say that now that we are starting to move down with a little bit more ferocity, I'm going to remove the 15-minute level and put this level on here as a better level, 75.10 by 75.26 for a potential reversal. Looking at crude, so crude actually, the opposite, rallied up in the overnight hours, but we're still between our major areas of both demand and supply. Nothing has really changed in our supply-demand equation. We got a little bit of a pop up here, and we typically anticipate those speed candles to get retraced. So I'm going to put some lines around this area, knowing that there's a chance that this speed candle will get retraced. However, be aware, we're still in a sideways price action movement, so it's a little bit lower probability. Gold, last night in looking at gold, we had looked at, potentially the gap fill trade, but the fact that we based in front of the gap fill told us while we were in the class that we would not take this trade, and that was one of the things that we had talked about. We were looking at the gap fill trade early in our live trade room. This was the gap fill trade right here for those of you that are looking to trade, the gap. And so I'd said, well, depending on how we arrive into this gap will tell us if we want to take it or not. Well, if you notice that on the way into the gap, look at this long wick, right? And that long wick down there means that price tried to get down there and then popped up. And so to me, this is basing just before the level. So we actually didn't take the trade live in the classroom because of the basing before the level. And so in doing so, though, we created a new level, a new area of opportunity, and that's really what this 1286.9, 1287.5 becomes. I think that becomes a pretty decent little area for price to reverse into the next time we make it up to this region. Now, it's on a 15-minute chart, so it's going to be with a purple line, looking at that going forward in the future. So that's the point of reversal for that one. bonds and currency markets. So we are coming close to our confirmation reversal in the bonds, although not quite there yet. So I'm going to leave that kind of be as it is. In the Aussie, we had looked at a potential on this little tiny level, this 15-minute level right here, but we still have our breakout level down below us. So that 15-minute level comes from after the gap, a little bit of basing, nice move away. We've come close to it, but unable to quite get filled on it. In the euro, we were looking at a potential to get long back up above this area here. Price did not yet get back up above there. We came close to it here at around 4 a.m., but we're unable to do so. So the next little pop higher would be our breakout to the upside in the euro. And then in the Canadian dollar, we are still between our major levels of both demand and supply. So really nothing to add from our prior charts, although some pretty strong levels from Friday that worked out pretty well. Great British Pound, Japanese Yen. So the pound actually has entered into a little bit of a zone that we identified last night. So be aware that if you did get into this pound level, go out and draw it out here. Now, this is a 15-minute chart. So on a 15-minute chart, remember that our 6 candle rule comes into effect. And so if you look at this, we've based below the level, and now we've got 1, 2, 3. So essentially, I have 45 more minutes for this thing to make a move. And if it doesn't make a move in those 45 minutes, I would believe it'd be better to close that position out. Even if we get a little bit of a move and we're sitting down here, move your stop to break even. Primarily because of the basing here just before the level. We did touch it, so there's our first 1, 2, 3 candles in, and no strong movement as of yet. Remember, 6 candle rule comes into effect in these kind of conditions. So, today, here's what I say on days like this. I mean, this is all stemmed off of the China tariff news. Trade your plan. Don't overreact. Trade your plan. Let the market come to you. And when you have the right opportunities, take it. But don't force a trade. It's really easy to start chasing in a market like this and just short wherever. Well, you can get a 15-point rally in just a few minutes that will be a loss that's bigger than you can stomach. And even though you may be right on direction for the whole day, you may get a rally up against you 15 or 20 points early that wipes you out of the position, right? So just be aware that you still want to trade your plan. Follow your plan, follow your rules, and everything will be all right. If you got any questions, please send us an email, support@tradersarmy.com. Until tomorrow, everybody, I will see you soon.